Why are Goldman Sachs, Citibank, and many other major financial institutions revising their copper projections and increasing their price forecasts, not for 10 years down the road, but for next year? There's been some seismic shifts in the copper sector, and today we jump into all of those. My guest is Ian Harris, who's a veteran entrepreneur and mining engineer in the copper sector. He's built an amazing team around his company, including some of the biggest personalities in the mining sector, former CEO of Cobre Panama, Ernie Mast, and one of the most legendary mining investors and entrepreneurs, Frank Giustra, as his capital partner. And Ian's team has been consistently putting out some of the best copper drill results in the industry over the last year. Today, we get into the supply side, the demand side, what's changed, why these banks are adjusting their forecasts, and what we can expect from copper in the year ahead. This is the Jay Martin Show, where we dissect the greatest minds in geopolitics and finance so we can better understand the world. Here is Ian Harris. Enjoy.
This is Jay Martin.
All right, here I am with Ian Harris. Ian, it's great to see you again. Thanks for coming on today.
Always a pleasure to have our conversations, although I feel like our past conversations are what's happening right in front of us, and now we get to, it's like more live action, what's going on in the planet, and especially copper equities and copper commodity space. So look forward to a fun discussion today.
Yeah, awesome. Yeah, tons happening. So you're right. It's funny reflecting on previous conversations and all of these forecasts that seemed audacious, 6 months ago, 12 months ago, and now we're kind of living in that reality. And major news in the copper sector just over the last couple of weeks, and today's no exception. But what a just like headline rich sector to be in. We spend a lot of time talking about demand, and I want to get into demand with you today. But before that, I want to talk about some supply developments, because in the last couple of weeks, there's been some major banks, Citibank, Goldman Sachs, revising their near term, their 2026 copper outlook to put the world in a copper deficit a lot sooner than they thought. And they're upgrading their copper price forecast in relation to that. Now, my assumption is that that's in response to a couple major mines running into big problems, right? Grasberg here in Indonesia, where I'm at. Obviously, that's Freeport-McMoRan, just, horrible situation. But, that's second largest copper producer in the world. And then Teck revising their forecast, revising them down, both in their Chile mine and their Canadian project, the Highland Valley. So what's your take on supply right now, Ian? Like, what are you paying attention to, and how are you interpreting all this?
So I look at both supply and demand, right? Because it seems that the world has a short-term focus, because we really focus on copper price as supposed to be the litmus test for how things are going and should translate right into equities, right? So I obviously watch that because it normally extremely bullish for the equities, even though I think the case today is extremely bullish today, because these things don't play out over weeks, even though the market tends to have knee-jerk reactions over a very short period of time. So it's a combination of supply, and when you have tightness in the copper market, it's not the same as in other spaces, right? Because it's applies to so much of the world's economy today, right? Still 90%, 95% of all copper still goes into electrification, right? So we're talking about energy transition and, sustainable energy. And now we're talking AI, and we're now talking data centers. And there is obviously an expectation that those sectors will consume a much larger portion of overall supply of copper. But when you don't have enough copper, that means people don't get lights, right? It means that people don't get the energy that they need to advance their economies. So a shortness in copper creates a more desperate type reaction to the lack. And so that's where it plays out. So it was already extremely tight. We've, I think, even had conversations about how smelters, there was so much tightness in the market that smelters were paying to process concentrates. Right. So normally you send your concentrate and you get paid for it. There was so much tightness that smelters were paying mines to process their concentrates. That's how much tightness that there was already in the market. So having some big disruptions in supply obviously makes people change. It doesn't take much to switch something over because they were already anticipating extreme tightness already. And it was just a question, when is copper going to go into deficit? Because there's just not enough new projects coming online. They're just, you can't, the cupboard is bare has been the expression. I even like Friedland, who, his posts all week on Twitter is, I told you so. Look what I said 2 years ago. What I told you is happening right in front of us. It's really playing out right now. Of course, nobody can predict when a tragedy happens, like happened at Grasberg, and it's really going to, create issues. But any sort of disruption. But behind the scenes, there's, in my opinion, right, there's a much bigger disruption already going on that is extremely bullish for the underlying assets. And it's called the deglobalization, right? The undoing of globalization that's going on right now, the fight that we see most in the Twitter space, right? In the truth space is US versus China. But a lot of other countries are also saying, what are we going to do about making sure we're securing our copper supply? And that is the real background that's going on that I think is going to create is the most bullish thing that could possibly happen for copper equities.
Could I ask you to add some context to that? Because I 100% agree with you. And I talk about this all the time on my show and in my newsletter, is that this new era of global trade, whatever it is, I think it's very unclear, but the old era is definitely over. That much is clear. The era of globalization that I grew up in, that's done. Whatever happens next, way less certain. For me, and I can, get into the details about why that's such a bull case for commodities in general, but I'd love, add some context to that. Why is the deglobalization trend bullish for raw material prices and copper specifically, Ian?
I think it's a combination of several things. I'm going to try and explain it the way I see it in the simplest way possible, right? If we are in a perfect system, I'm producing oranges and you're producing oranges, and everybody is producing oranges, and they just go into this big bucket. And then if anybody needs oranges, we produce 10 oranges and they want 10 oranges, and it's great, right? But then all of a sudden they go, you know what? Your economy is going to be based on oranges, and there's not enough new oranges, right? And so people start, what happened to toilet paper prices when people were worried that they wouldn't be able to get toilet paper? Right. That is what's going to happen when people go for the grab and hold their own. It's not about how much toilet paper you're necessarily using. It's how much you have in controlling that stock. Right. So put it in another set of context too, is there is a term out there that I love because I believe it's at least partially correct, that copper is the new oil. And what does that mean? Why is it the new oil? And it's because the majority of the world's economies over the last century have been based on oil, right? It's the basis for our energy, plastics, so many, and the world, even petrodollars, right? The control of United States dollar as a reserve currency has been based on oil. Now, I don't know if it's going to be a direct just go to copper, but at least it's telling you that the new world economy is more and more based on electricity. Whether it's data centers or AI or energy transition or the decarbonization, et cetera, right? That copper has a much more larger influence on the world's economy. It's already called Dr. Copper for a reason, but it's so important, right? So as you break up a perfect system where globalization is about, it's focusing on what you do. So if you build electric motors, I don't care where the copper wire comes from that I used to build my copper. And if you do copper wire, I don't care where the copper comes from, right? It's just I work on making copper wire. And I know there will always, market will work it out. But the second that trend goes to panic, which looks like what we're happening, everybody wants to secure their supply. So it means, what does it mean? If you're producing oranges or you're producing oranges, that people want to secure that. Now, everybody's grabbed it. What happens to somebody who's been left out? They need to find a new producer of oranges, in this case, copper. So that is why when the system breaks up, it's removing the efficiency of the system, right? It's now you need more supply in order to generate the same effect, right? Because people are hoarding it, right? And so that is why it's so bullish for the assets, because they're now in the pole position, right? And it goes from a buyer's market to a seller's market, and they can start negotiating terms. And then for projects in development, which there's so few of us, which we can get into too, is extremely bullish too, because people need that new. Once everybody sits down in the chair and there's a couple people left without a chair, right? They're going to be the ones looking for the new supply and going, how much does it cost, and how do we get there? And so then the last piece of it is, and I talk about this a lot, we've talked about it, that AI and data centers is a race, right? And as a race, it's not one of those things go, oh, well, let's just adjust our model and say we're going to be a little bit slower, because you can't lose. They feel it as a life and death battle between companies and countries, right? So if energy is a problem, we're going to write a check. If copper is a problem, we're going to write a check. So when you start getting into a deficit, and on top of it, you having a breakup of the world's economy, the deglobalization, right? And then there's big checkbooks, because for them it's life and death. And so this is how it's playing out. And really, even today's movement is why I took it as such a bullish signal. It's getting very, very real out there.
Yeah, and that's exactly how I process the deglobalization theory, right? Is that for the last 40 years, if you had the cash or the credit, you could buy whatever you wanted from whoever was selling it, right? It was a global market, and that made trade very certain. This new era is an era of uncertainty, exactly what you said. And when a necessity becomes uncertain, you'll pay far more, and you want to hoard that thing, whatever that is. Your 2020 toilet paper analogy is actually perfect. That's hilarious, but it's like kind of bang on and really simplifies the concept. It's no different. And we're seeing countries all over the world. India just last week announcing stockpiling of critical metals and copper, and they're trying to hoard. Hoarding is the new strategy. And the way this changes the game from my perspective, and I'd love to know your take on this, is that this now puts the commodity game off of my desk onto the desk of our officials, right? Our government officials, because this is now a matter of national security. And, you can look at practices of, call it state capitalism in many countries around the world. China's sort of regular course of business in this regard, right? The state often intervenes to assist private businesses taking more market share from foreign competitors. We're now seeing that enter the United States in a major way. And as a commodity investor, I actually see that as incredibly bullish, because there's a new strategic activist investor at the table, right? And if you're looking at projects that are favorable to the United States, that regional hegemon, like there's new capital available. There's a new bully at the table when it comes to regulation and permitting. Let's get these things done. We need this, right? And it's different. So what's your take on that concept? Like, call it state capitalism, call it, private public partnership. But are we in kind of like, am I reading that right? Are we in a new era here? We can expect more of that. And is it bullish for the raw material sector? Like, how are you processing that?
So I still think that the policy isn't necessarily so on the exact natural resources, but it's about the production chain, right? Trump does not care about gallium. He cares about that you use it in Tomahawk missiles. I made that up, by the way. Right? I don't know if that's a one-to-one relationship, but say moly, because you need it in the high strength, high temperature steels in some of your in your airplanes, right? That's what's important. And you're putting at risk our ability to advance certain important sectors, whether it's defense or it's your future. And AI is a battleground. Like, I mean, they're not acting like it, but they're not saying it, but they're acting like it. Okay, you can definitely see it. And so, in that point, it's securing this production chain, because it's the end product that they care about now. And as you explained, in the past, you didn't care, right, where it came from, and now they have to care. So I also think it's going to be in terms of, I believe it's going to start with the smelting and refining capacity. Okay, even in rare earths, we've known it for a very long time, right? The problem is not the deposits. The problem is the processing and refining. So it might be a little bit of knee jerk, and all the spotlight goes to the underlying assets, but it's the refining and the smelting capacity that is. Rare earths aren't that rare, right? It's how to produce them is the problem. That's a very broad brush, and obviously it's not applies to everything. There's obviously some deposit problems in some of them, but in generalities. So it's even when you saw the tariff on copper in the United States, we saw that dramatic drop in COMEX price, not an LME price, but we saw it in COMEX price was the day that's, no. On refined copper, no, but for 2 years. And basically that's a signal is you got 2 years to build your refining capacity here. So I probably see friend zoning. No, that's the wrong one. Friend shoring is probably what we're going to also be seeing, right? That's why you saw Donald Trump in Australia, right? And talking to 30 or 40 different companies and cutting little checks here and there. You see all these 5% placements all over the place, right? And that is, it's not an investment. It's an acceleration, right? They're using the check. We used to say, what should countries do in order to accelerate? Make the permitting easy. That's what we'd always used to say. But this is different. This is actually putting gasoline into the gas tank. Recognizing that the equities markets is a part of the problem, that we have a breakdown of the system a little bit over this last secular bear market that's really hampered us. So I do think, I hate to call it nationalism. I've definitely seen some Twitters about this is the new nationalism and it's a sort of nationalism, but I don't think it's going to go that far. I don't think we're going to go back that far, but we're definitely going to see a whole lot more domestic production to control the production chains, and of course, friend shoring.
Yeah, and that Australia development was interesting because there are a handful of countries in the world who are trying to thread the needle of neutrality between the United States and China for as long as they can. And Australia is one of those countries that's doing a pretty good job thus far. And it's in their best interest to do so because, if they're militarily aligned with the United States, their biggest customer is China. But more importantly, from a proximity standpoint, that's a more logical trade partner. The same as Canada would never actually decouple from the United States because we share the largest land border in the world. It's never going to be more cost effective to trade anywhere else. And Australia has to ask that question. That's a very convenient trading partner and a big one. How can we thread this needle of neutrality? So Trump being in Australia, very strategic and very smart, I think. And your comments about resource nationalism and all this stuff. I agree. And I don't see it that way. I see it as this is the new era. And if we were to step back and say, in this fractured global chessboard, we need for a minute just to think about countries like corporations, because that's how competitive it is becoming. And therefore, if your competitor is using a strategy, public-private partnership, to gain market share for their private enterprise, and you're not doing that, it's a problem, right? And so I think we'll see strategic moves like that, but it's not nationalism. It's a new era. I think it's a new era of strategy.
Yeah, absolutely. Because and the biggest difference is that I truly believe that AI, whether or not, you can argue easily that we're in a bubble in terms of the equity markets for AI, but it's still the future, right? It's still, or data centers. Forget AI. It's data centers. It's data and information and technology. That's where everything is. And in China, national policy and corporate policy is the same, right? Very, very close. And we're at a serious disadvantage because those two things aren't connected in other places, and people will be catching up. Is I think a very, 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 you summarized that very well.
So as we mentioned at the front end of this conversation, it's funny. Some of the chats that we've had 6 months, 12 months, 18 months ago are now materializing and actualizing in front of us. And but you've been on this trend for a long time and have assembled a team with Copper Giant to capitalize on this. And some of the folks involved, yourself, you put the Mirador mine into production in Ecuador, Copper mine in Ecuador. Ernie Mas, the former CEO of Cobre Panama, one of the largest copper mines in the world, on your team. Frank Justra, one of the most legendary natural resource investors and entrepreneur, as your primary capital partner. So you've been positioning for this moment for a while now, Ian. And now we're entering this stage, right? So walk me through what you're building with Copper Giant Resources. We've jammed on this, obviously, many times, but I want you to reintroduce the story, reintroduce the team a little bit, and the opportunity that you're trying to corner right here.
Yeah, obviously, when you're a mining engineer, so I'm a mining engineer, and I like making sure that the projects I run become mines, right? That's I feel like that's our purpose, right? Why else would we be spending people's money to an investment to try and advance these projects if it's not to actually see them one time be birthed? But sometimes we're not really in alignment with market. I think market gets it wrong so many times in terms of what are their overall picks. But I think it's maybe you see a little bit of knee-jerk reaction, short-term vision, et cetera, et cetera. But we've definitely, like you said, we said, what is the perfect project to build, right? And it's like you got good infrastructure around yourself. You got a good deposit. It's got to have scale. It's got to be size. These guys keep on buying each other, and sooner or later they're going to want to build some. They're not going to want to build 50 of them. What size do they want? To get to that size and scale, infrastructure is critically important because it's really becomes an equation many times of how much does it cost to add each new pound. So that's and infrastructure is one of the determinants that's very much different. And the other is how close to the surface is the deposit, and then the rest is grade, where everybody knows kind of grade. So we were looking for those things and a place, and is where I like to apply the rest of my equation. Can you build strength locally? Can you build the relationships locally over time? Build those relationships, build a national reputation, because that is what drives political will. And eventually you'll see a window in time where you can push things through and get things built, right? And I say that because if you look back at the last 10 years, there's only been really 6 projects built, big scale copper projects, right? Maybe 6, depending when you put, today it might be 5, depending on when you put that time scale. But you had Cobre Panama, right, which nobody thought could be built when Inmet had it, right? Too big, the middle of the jungle, way too low grade, too expensive. They sold it, First Quantum bought it, built it, right? Mirador. Same thing. Nothing's happening in Ecuador. Oh, look, new mining law, all this other stuff. We got it across the finish line, first to restart. Chinese 2 SOEs came in, bought it for $690 million. Stayed on for a year and started the construction. Got built. First industrial scale mine in the history of Ecuador. Las Bambas. Everybody walked from that project. MG and the Chinese also in partnership. They believed in it. Got it built. Right. And Congo, without Friedland, Friedland had the vision, made it. Otherwise, nobody would have walked at those projects. Right. So market gets it wrong a lot. And if you got to put the ingredients together. So at Mocoa, which is Copper Giant's main asset, already has 600 million tons of resource. Right. Already contains over 2 million tons of copper. It's probably one of the world's largest undeveloped moly projects, and arguably one of the very few that could actually be developed with a reasonable production rate. One of the very few, I'd say 1, 2, 3 projects in the world on the moly side, which is also a very important component. And it's real infrastructure. We got 220 kVA power lines that run right by the project. Right, it's a 30-minute drive from the airport. Nobody lives in the deposit area or where all the infrastructure would go. It has all these things going for it. It's not in the middle of the desert, so water is available, et cetera, et cetera, et cetera. So as comparison, Mirador, I think, was the lowest cost greenfields copper project in the world in terms of pounds per dollar spent on it, right? It's now moving to 150,000 tons per day style project. It just grew. And so that's what we saw. And there's a lot of things that we've done where we do it now because there's a vision to build it as a mine. A great example was the news that we put out last week, which was finishing our prior consultation with Inga Condagua, which is the only indigenous group close to the project. And we're the only company to do that during exploration in Colombia who's ever done that, right? And on top of it, we're the only ones we know of, and the government officials that we were talking to that did it, where there was the company representative and the Condagua also was being their own representative. So we did it together, right? So we really did it. And so it established this pathway on how to co-develop the project. And don't forget, over a year ago, 2 years ago, we had with Mocoa, which is the community that is closest to the project. These are the things that we put into place early on because that is what will build that cooperative spirit and then continue to build our national reputation. And I'm sorry I'm going on about this too much, but because we're very proud of it. The last is for the second year in a row, we've been ranked, I think we were ranked 12th or 13th in terms of national reputation with the government by Bruja La Minera, there's a national mining congress every year. The difference is everybody who's ranked above us is either a big producer, they're all producing, or they're a multi-billion-dollar company. And there's only really one of them, and they're Explorer. So there's only one other Explorer that's ranked higher than us, but they're worth multiples of billions of dollars. And so the little guys, we've already started to build a national reputation, right? So it's having that vision on how this becomes a mine, because I think it has all the rest. The rest is executing technically. We just put out new metallurgical test work that showed 97% recovery of moly. We went from 75% in our assumptions to 97. So I'll probably move. It's a big move because, and the other one is we're not seeing any deleterious elements. So it wouldn't be anything that would be a problem to smelt and to produce, for example, which is a big de-risk. But it also says you can get it out. So if everybody paid the same thing to mine the same amount of the same grade, but if you get it to a plant and they can't get it out, so obviously the economics change. So going from 75% to 97% on the moly, and now pushes moly to over probably about a third of the value, but it would push our average grade over 0.5% per pound, 0.5% per in our resource. And that's big. I mean, these are big indicators that the economics are looking good. And the other big one is it's near to the surface. We've been putting out 1,000-meter hole after 1,000-meter hole after 1,000-meter hole that's continuously mineralized, and that's a huge advantage, right? My other comparison is resolution, which is getting a lot of hype because it finally looks like it could be, it's got some sort of pathway under this administration to be built, but we know that if we started building today, it takes 7 years before it even sees its first production because it's so deep underground, right? So a lot of things are aligning. I wish I had more time, and I'm sorry I spent so much time, but there's so much bullish, and I think it is extremely highly undervalued, the company, compared to what it's got. But I think, at least over the last couple of months, it looks like the world is waking up and starting to see this is one of the few projects that has all the things together, right? It has the ability to get over. I see a pathway where this is currently at 600 million. It could get to 2 billion tons. It's got that pathway. And the last little tidbit is that we found the fertile period, the time that this thing was actually producing as a deposit was over 10 million years. And as comparisons, the other projects that have those, it's like Chuquicamata, right? The others are 3, 4, 5 years. Even Mirador was 5. Warintza was 3 or 4 or 5, right? But when you get 10 million years, you're talking about really can be the potential to be some of the biggest deposits. There's very few that have that many years to it.
First of all, I don't think you spent too much time on your community engagement and approvals. It's one of the biggest obstacles that will stop a project in their tracks for years is failing to find that alignment with the local jurisdiction, the region, and the community. And so building that at this stage in your company life cycle, I think is incredibly strategic. And I know firsthand that's not just smoke and mirrors, because every time I talk to anybody on your team, that's like the first thing they tell me is when they went to the project the reception they got from the local communities, right? And I know you employ from manufacturing equipment and gear that you use on site, you're employing the local community and tying them in to your success and Copper Giant success, like from day one, right? I think it's, I don't think it's a minor detail at all. I think it's very important. And so on the, so amazing results on the metallurgy front, and, surpassed expectations both on molybdenum and copper concentration. And how you mentioned really quickly, you're like very low to no deleterious elements. That's what we're finding here, right? So as I hear that, I'm like, that's just like, it's very low contaminants. It's very low challenges that you're going to face in terms of extracting economic mineral, right? That's how somebody should interpret this. We're finding just like easy to extract metal, and metal is not, and often not easy to extract. So that's why that's important. This tends to impact the valuation in a positive way when it comes to PEA time. But could you just expand and add some context to that for me a little bit, Ian?
Sure. There's an adage that grade is king, right? Recovery is queen. And I think we're all forget about payable. Payable is the jack. I don't know, whatever, we'll figure out the Duke, right? But because it's when you say grade is king, it's because if you have a mine and I have a mine, it probably costs a similar amount to get a ton out of the ground, right? Maybe here a little bit higher there. Okay, in the Yukon, it's going to be higher than it is Colombia, but we're talking 20%, 30%, right? But grade is king because it's what is inside that rock. And if I have 2 times your grade, I'm going to get 2 times more value out of that rock. So that's why grade is king. And then recovery is queen because, okay, great, you have it in the rock, but you can't get it out into something that can actually be sold. It doesn't matter. And the last is payable. And a lot of people forget about the payable part because if you can't get paid for it, right, it also matters. And so that's when deleterious elements really come into the economics, because there's certain smelters in the world, and even China is going, yeah, not anymore, guys. Not sending that stuff to us anymore. High arsenic? No, forget that stuff, right? So it's a combination of either an environmental impact that it creates at the smelting and getting it out of the air, or even sometimes it can affect the quality of the anode, which is the product that you produce when it comes out of a smelter, then goes through to a refinery, then comes cathode. But it or whatever. And the other one is it could cause you a problem because I have so much of it in my waste dumps or my tailings or whatever, and environmentally locally. But the big one that I think is easiest to understand is if you can't sell it anywhere, right? If we're selling those apples again, but yours a little bruised, Whole Foods is not buying your apples. So you got to go, maybe the dollar store buys your apples, but they're not going to pay the same as Whole Foods does. And so that's the problem. You don't get paid the same. You can't negotiate strong terms unless you have a very clean concentrate. So these indications that we have a very, very clean, no deleterious elements in our material bodes very well from both a permitting and the ability to sell a very quality concentrate. Now, I want to put a caveat there that this was the first stage rougher to develop a flow sheet to actually figure out what the concentrate will going to look like, and that will be our next stage of metallurgical work. This is kind of, Ian, what do I need to do the next stage of metallurgy to do a PEA, right? And so this is the first set that helps us develop that program for this next stage of evaluation. But it is looking really good. It bodes very well for the future of the project.
Okay, thank you for that. That's how that impacts your all-in sustaining cost. Can increase your smelting cost because you have to remove these contaminants. That can be challenging. Can end up affecting the quality of your cathodes at the end of the day. And third, you got to deal with it, right? So where's that arsenic going to end up? It's going to end up in your waste pile. That's a problem. You got to deal with that. That's added cost. That's added risk and liability. So that's how that materializes into, or that's why that matters to me as the shareholder when it comes to the end game, correct, which is the payable. And thanks for tying that in because you're absolutely right. The Duke, payable, the Duke. I like it.
Shocking to me, though, is the one thing that I don't think market understands. They believe grade is so much king for such a long period of time that they don't understand. There's a difference between, if you add a mining engine, would you rather have 5% 50 meters down, or would you rather have 1% 800 meters down? And of course, a mining engine would rather have 5% early. Is that the depth is such an important factor nowadays, copper projects. And maybe it's because so many were built, all of them to date have been very near surface. And I don't know if you've ever seen that graph of discoveries, and then it goes all the way down. And resolution, by the way, is way down here on the bottom. And they say all the new discoveries are getting deeper and deeper and deeper and deeper. So we haven't faced that issue yet, I think, as investors, to understand that the cost of developing an underground mine and even getting there, right, the time value of money is dramatic. Is very, very, very dramatic on projects. And so that's another thing that I would say people need to keep an eye on. How close is this thing to surface, right?
Well, you mentioned that as one of your four major points. You talked about infrastructure, proximity to surface, size, and grade, right? And just knowing Copper Giant. And as you mentioned, you're 30 minutes from an airport, have access to water. There's power available, no near proximity residence, right? So infrastructure is in a good place. We talked about grade, we talked about size. Let's talk about proximity to surface a little bit and expand on that a little bit for me, Ian.
Yeah, and again, if you're even let's just pretend it's not even open pit, because the easiest answer is, well, it's a lot cheaper to do an open pit mine than it is to do an underground mine, right? It's just, you can get it, right? Being more selective or being less selective is a big deal. But even for underground, just doing a shaft, and the deeper the shaft, the more it costs. And it takes longer to get there. Right. And the time value of money is huge, right? When you're trying to look at strong economics and the return of an investment, right? Having to wait 5 years before even seeing initial production is crazy, right? And being able to do that work and doing the engineering, et cetera, it's so important how close those deposits are to surface. And of course, for an open pit mine, it is also ridiculously important because you have to pay to get rid of all that stuff on top before you get down to the good stuff. And I would say there's a third combination, but I don't want to get overly complex, is do you have higher grade material sitting here at your surface too, right? Is the best parts of the deposit also close to surface? At Mocoa, about 40% of all of the copper is above 0.75% copper in the current resource, right? So we have these big sections of higher grade. A lot of the higher grade material carries a lot of the copper. Plus, we have a massive amount of disseminated. So it's like you cake and eat it too. So even the bad stuff still gets fed to the mill and produces revenue for you, and you can focus on fronting the higher grade material. And one of the reasons why our news last week was so exciting, because we found a third high grade zone, and we continue to see, which most of the high grade to date has been in the breccias, which is a very late stage remobilization. But we're now seeing porphyry material that's extremely high grade too. We're seeing portions, because you're looking over 10 million years. There's a lot of different events that have happened. There's certain sections where, wow, this one was really full of copper. And so that helps us track it, because I really think at Mocoa, we're at 600 million tons. And I told you with a straight face, I think there's an easy pathway to how this could get to 2 billion tons, is that we're really maybe just touching the tail of an elephant. And so having that geological information of something to hunt for, we now are narrowing in into the best pieces of the project. We have some amazing geologists working on it. We have attracted some of the best geologists in the world. One of the newest additions to our board of directors was Mark Gibson. He's a world-renowned geophysicist. He worked in Colombia. He was with Ivanhoe Electric and also with Cordoba Minerals in Colombia. And he called up to say, I'd really like to be able to join you guys. So I get really excited when I see people that I admire wanting to work for this project, because they can see it, even if it's before market. I mean, we are probably up 80% in a month, but it's still extremely undervalued as a company.
So where I want to wrap this up then, Ian, is speaking to prospective investors who are tuned in now. What everybody always wants to know is, what can I expect, right? What's going to happen next? So in terms of near-ish term news flow, walk people through what they might hear from you over the next 4 to 6 months.
So the last thing I'm going to say with a straight face is people ask me what the big catalysts are, and I've already can say without a doubt we have already hit so many major catalysts that they've already been hit. Right? We showed that we could restart the project. We've now been drilling for over a year with nonstop, showing that we can continue to drill. We've got the metallurgical test work done. We continue to put out some of the best holes on the damn planet every week. When you see that, best copper hits we're always on that list when we have drill hole results out, right? We just did our first the prior consultation with Inga Condagua, another big de-risk, right? We've shown that we can advance this project. We've got a massive sponsorship with being in the Fiore Group and Frank Chustra, right? So really what this project has been waiting for, I say, there hasn't been a moment yet in market to show a graduation. We've been trading for 0.1 to 0.2 cents per pound in the ground, where other advancing good solid projects are at least a penny, right? To like 5 pennies, 7 pennies per pound in the ground, right? So I call it getting that graduation. So really it's a market window, I think, is the most important news that everybody should be looking for. And it looks like it's happening right in front of our eyes. And that's why we've seen such a strong performance over the last month. But again, there's a big go from 0.1 to 1 is 10x, right? So I expect that this company could be very explosive in the near term. But anyways, we'll continue to keep eyes. We're continue to be drilling. We're now already starting the work to do an updated resource estimate. That's important. We really want to show how this can get over 1 billion tons. And then the last thing that we have is we have elections in May in Colombia with a new president in August time period. And that's kind of my goal of a time period I'd like to see, not exactly that date, maybe a little after, maybe a little bit before, but I want to start pushing towards getting towards a PEA, right? So we'll be able to see the economics. And because I think the president is going to go, I want to show how I can create employment. I want to show how I can bring in investment into this country. Anybody got anything? And I want to be able to raise my hand and say, look, this is the first run. This is what the project looks conceptually based on something it can touch, which is at least a PEA. So that is the strategy right now. I honestly wish I could get even more drilling done before that time because I'd like to get higher into that resource number, but perhaps it continues to grow as we advance the project. So we'll continue to see news in terms of deliverables on the drilling, the upcoming drilling, updated resources, and moving into project development with a future PEA that will be coming down the road.
It's exciting, Ian. Man, lots in the pipeline. Congrats on the success this year, by the way, and continuing to just trump the market with your drill results. And I love how much you love copper, by the way. It's always like, I love talking about copper with you because, man, you just, and, whether we're talking macro or getting into project details, comparables, what's occurring from a geology perspective, you're so in the weeds but I'll learn a lot from you. So I appreciate that, man. I always love catching up with you. So great to have you back in the program. Thanks for making the time. Looking forward to seeing you VRIC in January, right around the corner.
Yes.
In Vancouver. So you guys want to catch Ian live on stage, meet him at the show. He'll be there January 25th, 26th, Vancouver, British Columbia, vricmedia.com. But check out Copper Giant Resources. Ian's assembled an amazing team. We ran through a handful of names today, but it really is like the best in class copper team in the business, from mining experience to capital connections. It's exciting. So congrats, Ian. Always great to catch up with you, and I'll see you soon.
Thanks, Jay. Always a pleasure having these conversations.